Hey everyone, welcome back to Veritologic. We have some big news today. The Federal Reserve is planning more rate cuts and potential bailouts are on the horizon. Recently, the core PCE price index, which is the Fed's go-to measure for inflation, showed that price pressures are easing more than expected. This is great news because it means inflation is cooling down. For those of you who are new here, I'm Sam, your host for YouTube Talks. I'm currently pursuing a PhD in economics, and yes, I've survived not one, but two business schools. Love economics and business? Well, you're in the right spot. Smash that subscribe button, give us a thumbs up, and let's get into those details. In August, the core PCE, or the Personal Consumption Expenditures Price Index, indicated a significant drop in inflation. This has led to a slight rise in the S&P 500 as investors are now speculating about potential rate cuts by the Federal Reserve in their upcoming meetings. Market analysts are currently split on whether the Fed will cut its benchmark interest rate by 50 basis points or just a quarter point at their next meeting on November 7th. This decision could have major implications for the economy and for your investments. Oh, and by the way, all of this information is coming from an article published today by Jed Graham in the Investor's Business Daily. Now let's dig a little deeper into the latest PCE index. So we know it rose by 0.1% in August, which matches the consensus forecast. However, over the past 12 months, headline inflation eased to 2.2%, which is down from 2.5%, which is lower than the expected 2.3%. This marks the lowest headline PCE inflation since February 2021. The Federal Reserve typically focuses more on core inflation, which excludes volatile food and energy prices. So we know in August, the core PCE price index also rose by 0.1%, and this is slightly below the forecast of 0.2%. However, the 12-month core inflation rate increased to 2.7% as anticipated. On an unrounded basis, the core PCE price index rose by 0.13% in August, and this indicates that inflation remains relatively tame. The 12-month core PCE inflation rate edged up from 2.65% in July to 2.68% in August. Looking at shorter-term trends, the 3-month annualized core PCE inflation rate is running at 2.1%, which is up from 1.9% in July. Meanwhile, the 6-month annualized rate eased to 2.4% from 2.6%, and this is the lowest since December. These figures provide a mixed picture of inflation, but overall, they suggest that inflationary pressures are moderating. This could influence the Federal Reserve's decision in the coming months. Let's shift our focus to personal income and spending. So the PCE price index is a key component of the Commerce Department's monthly personal income and outlays report. And in August, personal income saw a modest increase of 0.2%, which fell short of the 0.4% that was forecasted. Likewise, PCE rose by 0.2% in August, which was below the expected 0.3%. And this indicates that while there is some growth in income and spending, it's not as robust as analysts had predicted. These figures suggest a cautious consumer sentiment, possibly influenced by the broader economic uncertainties. Understanding these trends can help us better anticipate future economic conditions and make informed financial decisions. Now let's talk about the Federal Reserve's rate cut outlook. After the latest core PCE inflation data for August, market pricing shows a 54% chance that the Fed will follow up this month's half-point rate cut with another significant move at their next meeting after the election. Interestingly, the odds of another big rate hike stood at 49% as of Thursday. Markets are currently predicting a 76% chance that there will be 75 basis points in rate cuts over the final 2 meetings of the year. This is up from 72%. This suggests that investors are increasingly confident about more aggressive rate cuts. Here we have a chart indicating the target rate probabilities for the first meeting in November from CME FedWatch. On September 18th, the Fed released projections indicating 1 percentage point worth of rate cuts by the end of 2024, and this implies a quarter point cut at each of the year's final 2 meetings. Federal Reserve Chairman Jerome Powell has mentioned that further softening of the labor market could lead to deeper rate cuts. However, Fed Governor Christopher Waller recently stated that he would also support another significant rate cut if inflation cools more than expected. Finally, let's take a look at the S&P 500 and broader market trends. After the PCE inflation report, the S&P 500 added 0.1% in early Friday trading. On Thursday, the S&P 500 rose 0.4% to a new record, marking a year-to-date gain of over 20%. Meanwhile, the 10-year Treasury yield dipped 2 basis points to 3.77%, reflecting softer than expected income and spending gains. The latest data shows easing inflation, modest income and spending growth, and a mixed outlook for Federal Reserve rate cuts. These factors are influencing market trends and investor sentiment. Stay tuned to Veritologic and hit the bell icon for more insights and analysis on how these developments can impact your financial plans. Thank you for watching, everyone. And if you found this video helpful, please don't forget to like and subscribe.